Good morning. Happy Friday. Mercifully, this week is coming to an end. It sure has been a crazy week. And look, it's only normal for you to be experiencing a little bit of anxiety, concerns, even fear about what's happened and where we're headed. So thankfully, it's a quiet news day. Give us a minute here to take time to gain some perspective. Perspective for your borrowers, perspective for your referral sources like realtors, and you know what? Perspective for you as well. Take a look at what we see going on here. So yesterday we got the existing home sales report. And the existing home sales report showed median home price of $208,000. It showed that home prices are appreciating 12.9% year over year. But if we take a look at that $208,000, and for a minute, let's look at an ADL TV, which is about $166,000, and let's see what the change in rates means. So if they were lucky enough to lock May 1st, when we issued a lock alert, and got a interest rate of, let's say, 3.5% for argument's sake. Well, if they were to today lock, their rate might be 4.5%. It's a pretty big jump. In fact, that jump represents about $96 a month or $1,152 per year. So is this reason to maybe not buy a home? So they say, well, look, it's not worth it anymore. I'm not going to buy this home. Well, they still have to live somewhere. And people make a mistake. They view things in isolation. They don't look at the big picture. They don't look at, okay, what are the alternatives? What are the other choices that are involved? What are the comparisons? So life isn't about perfect. Life is about choice. So if you choose to rent or you choose to own, maybe you say, well, maybe I'll still rent. Let's take a look at this for a minute. I have a chart I want to show you. And let me pull this up. I did this real quick here with my team, so this isn't exactly lined up perfectly. But when we take a look at this, as a matter of fact, we okay, there we go. Existing home, $208,000. ADL TV is $166. A 30-year fixed payment at 3.5 would be $745 a month. At 4.5 today, 6 weeks later, we have a big jump in rates. It's $841. That's $96 a month more. So $1,152 per year. Now let's take a look over 5 years what that means. It means it costs you $5,760 more to purchase this home today than it did just 6 weeks or 7 weeks ago. So should you throw away the decision? Well, if you rented, let's just say you rented modestly, just $1,000 per month. I think that's a very conservative estimate here. $1,000 per month is $12,000 per year. Over 5 years, that's easy. It's $60,000. But what if your rent increased by 5% per year? Well, we did all the math, and a 5% increase per year starting at $1,000 per month, you total it all up, it's $69,962, or an increase of $9,622. When you compare that to the $5,760, it's nearly $4,000 more if you still chose to rent and if you said, I'm not going to purchase a home. Big mistake. But the real tragedy here is if you miss out on the opportunity to buy a home. Look, you've heard me talk about home prices going up and all the factors and all the demographics and all the reasons why. And we've been seeing that. Heck, we've hit it on the nose. You know, you're looking at relatively 13% annual appreciation, but let's be really conservative. Let's take 5%. Just 5% appreciation, and I sincerely believe we'll do better than that. That takes you 208 existing median home price, and 5 years from now, at a 5% rate of return, it's 265. Now, that means that you would have gained $57,000. Combine that with the $4,000 difference, $61,000. See, people get short-sighted. You miss out on $61,000 of appreciation and gains because, you know, their monthly payment went up $90 a month. You know, I'm not saying that $90 a month isn't worth consideration or give you anxiety, but it's unwise to dismiss the whole idea of buying a home because rates are higher. Still 4.5%. Now, if you're in this business like I am, almost 30 years, 4.5% sounds pretty darn good still. Now, how about some perspective for you? That's maybe for your realtor, for your buyer, but I want to give you some perspective too, because what we've seen, as I said, creates some anxiety. But you know, this is something that we've been through. We've overcome so much stuff. Many of you have been through the financial meltdown. You've been through at least one stock market crash and seen your portfolio get hit. You've been through housing crashes. You've seen this happen. And look, much more importantly, who of us has not had personal circumstances that have been times of crisis that we've overcome? So while this is a challenge, it's something that we'll definitely get through. And in fact, you know what I think? I think this is an opportunity. It's an opportunity to grow your business into the future. It's an opportunity to take your business and build it stronger into the future, gain market share. And to give you some perspective, I've got another chart for you, and I want to show you the housing market itself. And let's take a look at what we can do to grow our business. So here's a look at the housing market. And what I want you to take a look at here is there's 133 million units in the entire housing market in the United States. 121 million are occupied. Let's call it 79 million are owner-occupied, and 42 million, let's call it, are rented. Of those owner-occupied homes, 26 million do not have a mortgage, 52 million do. Of the 52 million that do, 44 million have equity. You see this piece here, this $44 million slice? That's our world. That's the whole mortgage world. Every loan that you do, every purchase, every refinance, every loan you do is in here. And all of your competitors live here. Everybody in the mortgage business lives here. But what about the opportunity with renters? We just talked about that. There's an enormous opportunity here, and if we could target that, it could be very fruitful. How about people with no mortgage? It doesn't mean they don't have financing needs. They may have debt at higher rates. They're going to be much less rate sensitive. In addition to that, what if they need money for retirement or college? Business opportunities. This is a segment here, if we could target through accountants, financial planners, this is an area that certainly can be representative of less competition and great opportunity. Look, there are ways for creative people like ourselves to utilize tools and find ways to succeed even when challenges are thrown at us. And I know you have that opportunity as well. Let's take a look at the charts. We're flat. Isn't it amazing to see no change after all of the wildness? It's almost weird. Stocks are bouncing back today. They're trying to make a comeback. They've really taken a hit. And even the 10-year treasury, it's like everybody's like a deer in the headlights saying, I don't know what the heck to do. I think the markets just need to take a breather for now. We switched to the 3.5% coupon, by the way. And as you can see, we touched on support yesterday. We're bouncing a little higher today. It's an encouraging sign. It's a wide range. I don't expect this calm to continue very long. There's probably going to be some continued volatility. Look, we'll start by floating. The market dictates that we can float for now. And have a great weekend. You know, things are going to get better. We're going to get through this. And hopefully, we'll see some improvement in interest rates to help us along. Have a great one.